2 minutes. Got a really good special guest. Get things started off here, and I'd like to introduce our special guest here. He'll be giving a presentation today on the right way to trade tops and bottoms. It's Steven Primo. Steven, done a couple of things with Steven in the past. He's a great trader. He's been a professional trader for over 37 years and a veteran floor trader. So he's got a lot of great material, strategies and everything, and I'm going to turn it over to him at this time.
Thank you. Thank you very much, Larry, and thank you everyone for attending this webinar today on the right way to trade tops and bottoms. Welcome once again. My name is Steven Primo. I am the president and founder of Specialist Trading, and I want to welcome you once again to this presentation in conjunction with Larry Gaines and the Power Cycle Trading. Thank you, Larry, excuse me, for inviting us to present this in conjunction with you. Just to give you a little bit of background about, okay, thanks. Give you a little bit of background about myself. As Larry stated, I've been trading for 37 years. I started my my tenure, I guess I should say, my career on the floor of the Pacific Stock Exchange. I was on the trading floor for a total of 16 years, and 9 of those years I was a specialist for Donaldson, Lufkin, and Gen Rep. So that's where we get the name Specialist Trading. For those of you who aren't familiar with what a specialist was or does, there aren't very many of those left anymore. If you ever look at the old pictures of the traders on the floor, the trading floor, and all the paper on the floor and people shouting and yelling, the specialists were those gentlemen behind the large booths where if you wanted to purchase or sell a particular equity, you had to go to the trader who specialized in those. And a specialist usually had anywhere between 35 and 50 stocks that he specialized in, so you would purchase, buy, and sell from this person. I traded through the crash of 1987. I traded through the bull market that followed after that. And in the mid-90s, I left the floor to manage money, to pursue my own trading. I've been an educator, or some basically for different websites, a trading educator and a director of education, and I basically taught and mentored people, but for other types of strategies or systems. 6 years ago, I started Specialist Trading, where I basically just teach and mentor all of my students, or everything that I personally trade myself, all the things that I've accumulated in 37 years. And even though I provide my students with strategies and tips and techniques, as you see here, we're really an educational company. We're more about teaching you things that you can use, that you can empower yourself with, so that you won't have to rely on an outside source. You can ultimately make the trading decisions for yourself. So even though once you become a member of Specialist Trading, you're a member for life, really it's more about making those decisions and just coming back every once in a while for a fine-tuning and being able to trade with all the things that we teach you. Now, before we begin, we're required to show you this, so I ask that you please take a moment to view our disclaimer. I'm going to show you some performance results in trading, which in my opinion is the right way to trade tops and bottoms. But please remember that we can in no way guarantee that any of the results I'm about to show you will be repeated in the future. So please take a moment to view our disclaimer. And as you're looking at that, I'd also like to mention that I love to answer any questions that you may have. We have a fairly large audience here today, but I like to hold my webinars in the form of a class. So if you wait till the very end, it's going to be a lot smoother, and I promise you I'll answer each and every question that you may have. So if you wait or write down, try to remember any questions you may have. I promise I'll get to them at the very end. Oftentimes, many people will say they have a question and it's answered in the very next slide. So please, I appreciate it if you wait till the very end of today's presentation. Also, before we begin, I'd like to invite all of you to follow us on Twitter. That's our handle there, our Twitter handle, SPCLST. TRADG. We post a lot of great free information, a lot of signals that we are currently in. In fact, 2 days ago, we posted a signal that all of our members hopefully took. I know it was a great signal to go short the market, especially the mini Russell. And so we posted that on our Twitter page. So there's a lot of great information. We tell you what we're in, not only for stocks, but for the futures as well as the currency pairs. So I invite you to follow us once again at SPCLST. TRADG. Okay, now, as I stated, first and foremost, Specialist Trading is an educational company. We really want to empower you with all of the tips and techniques I've accumulated so that you can ultimately make your own decisions. We don't want you relying on outside sources as much as yourself. So we are an educational company, and the reason I say this is because I know what it's like to go through difficult times. Even though I was on the floor, I know a lot of people think if you were on the floor you had a license to steal and just to print money. But my first year or so as a trader, I had a very difficult time. I was doing all the things, the conventional wisdom that was taught to me, how to trade, what indicators to use, what news to look at, and I still couldn't seem to get things going. In other words, I would have maybe 4 or 5 really good trades, but it was always the 6th or 7th trade where I gave everything back. And so there was no consistency in my trading. It wasn't until I came in contact with a few other specialists on the floor. These are traders who had been trading for 30 or 40 years who turned into my mentors, and they taught me how to trade with the specialist edge, which is really just formed with simplicity. It's really stripping away all of conventional wisdom that really doesn't seem to work and just making your trading plan as simple as possible. So once I started doing this with my trading, I started getting on that road to consistency. So this is what I try to do with all my students and my members of specialist trading, as well as in my webinars. I try to at least teach you something. So if you decide not to become a member of specialist trading, you can at least, at the very most, use the information I gave you for free, and hopefully it will better your trading. So my goal is to teach you how to trade with the specialist edge, which is really rooted in simplicity. Okay, so I'm going to share a lot of that with you today. Hopefully you can start using this information as early as tomorrow, and hopefully, ultimately, you'll become a member of specialist trading. All right, one last announcement before we begin. Some people may have just joined us. If you do happen to have a question, kindly wait till the very end. I have a little question and answer box here, and I won't even open it up till the end, so I won't even see your question if you happen to write something in there. Okay, let's start out. Remember, we're talking about how to trade, the correct way to trade tops and bottoms, and I know this firsthand because when I was on the floor, when I first started trading, I tried to trade tops and bottoms. It's very, very difficult. As I stated, I would have 2 or 3 winning trades, and then that next trade I would give everything away. So I'm going to share with you how most people trade tops and bottoms. Very simplistic, and then we'll look at some examples and some chart examples to show you how most people trade, and then how you can alter that to trade and make your trading more consistent. These first charts are going to be much older, so they may be even a year old, but I do that for educational purposes so that you can see an ideal chart so you can understand the process. But then at the end of today's presentation, I'll show you charts that are as recent as today. All right, so here's how most people trade tops and bottoms. Let's look at this older chart here in stocks. We'll start with stocks first off. We'll start off with Apple, okay? Now, what most people do is look for an overbought, oversold type of indicator. This can be a stochastic, RSI, something that you've come up with, anything that tells you that the market is overbought or oversold, because conventional wisdom tells us that when we were overbought, that's the time to sell, and when we were oversold, that's the time to buy. So if we look at this standard slow stochastic, this is just a very standard slow stochastic tool. I didn't edit it. I didn't change anything. The upper threshold is at 80. And anything, once the indicators cross above, that's the so-called overbought territory, and the lower threshold is at 20. Anytime the indicators get below, that's the so-called oversold territory. So what we've been taught is that once we apply this or any type of overbought, oversold tool, when we're in the oversold and the line supposedly cross, this is a buy signal, such as this right here. And this would have been a really nice purchase of Apple until you get to the oversold area. When we get here and the lines cross over, then you would have sold. So you had 2 really great trades trading this technique, okay? So as we see here later on, the lines cross again in the oversold territory, telling us that it's time to get back in. So you would have purchased once again, and things really didn't work out so well, but then they started to firm up. So now you have a nice profit, but you haven't exited yet. So you were waiting for another profitable gain, and then lo and behold, the market sells off. But that's okay. You've had 2 profitable trades, and you're back in the oversold territory. So you decide to double up. Why not make some more money? And so you purchase some more Apple, and guess what? It goes lower and lower, okay? So this is what I was talking about. These type of trading strategies will work until they don't work, and then you usually give everything back. Now, this also works with futures. If you're trading E-mini S&P, here's an older chart of the E-mini. We've applied the same overbought, oversold, slow stochastic, and when we get into the bought area, we short and we make a nice profit. We get in the oversold, we purchase and make a nice gain again. And now we're back in the overbought territory. So conventional wisdom tells us to short once more, but we don't go lower. We actually go a little bit higher. So you decide once again to double down. You have some money in your pocket. You have a nice cushion, so you can sell some more future contracts. And look what happens. It continues to go higher and higher until you've given everything back. All right? Same concept. Now we go over to the Forex markets. Same concept applies. We're looking for overbought, oversold types of situations. We're looking at the dollar yen here, an older chart of the dollar yen, and we see here that we're in some type of overbought territory. Once again, the lines have crossed, so we decide to sell, go short the dollar yen. We sell some contracts. It doesn't really go lower, but it doesn't go higher either, so maybe we double down because we've crossed over again. We go higher, we triple down, and by this time we've given everything back in our account. In fact, most likely you probably would have wiped out your entire account trying to short the dollar yen. So this is the way most people trade overbought, oversold situations. This doesn't matter if you're trading stocks, forex, E-minis. It doesn't matter if you're trading the actual equities or if you're purchasing contracts or if you're purchasing options. This really is more like a gambling type of mentality because such as the same thing as playing the slot machines. It'll give you the false impression that you're doing well, but over time you'll look and see that you really haven't been making any money at the slot machines. You're actually losing. It's just that it gives you this false impression that you're doing well. It's the same way with this type of technique. Every once in a while you'll have a nice winner, just the way I did when I was trading, but then all of a sudden you'll give it all back. So you really don't have a lot to show for this type of trading of tops and bottoms. So here's what my mentors taught me. And once I really understood this concept, this is where things started to click. They said, Steve, the first thing you have to understand is there is no such thing as overbought or oversold. And I didn't understand that at first. I said, how could that be? They said, Steve, any equity, any future, any currency pair can go as high as it wants to. The sky's the limit. And we've all seen things go down to zero before. We've seen equities go down to zero, just totally blown up. So it's really, it's not in your best interest to be trying to pick tops and bottoms. So they said, really, as long as you understand this concept that there's no such thing as overbought and oversold, well, then you'll get on that track to consistency. Well, so I said, well, what is the right way to trade tops and bottoms? So if this webinar is trying to show you the right way, I'll tell you the exact same things my mentors taught me. How do you trade tops and bottoms? And they simply said, by going with them. Okay? I said, okay, by going with them. What does that mean? Well, let's look at the same charts we looked at earlier. What my mentors taught me, and they said it didn't matter if I were trading a 5-minute chart of a stock, a future, a forex market, or if I were trading a weekly or monthly or a daily bar chart. They said the first thing I should do is plot a 50-period simple moving average, okay, such as we did right here. And then we ask ourselves a question. Where is price in relation to the 50-period simple moving average? You always have to ask yourself before you pull the trigger, before you get a setup, but ask yourself, where is price in relation to that? Because you'll only come up with two answers. If price is above, then you only look for buy setups. You only look to go long. And if price is below, such as it is in this example, you'll only look for shorting setups. So you see right now that we had no business trying to pick a bottom in Apple. It's okay to take short signals, but we're not interested in purchasing or going long Apple. All right, now how do we use the same tool? Well, my mentors taught me, they said, since we're going short, what we want to look for now are those so-called oversold areas, as we see here circled in red. See here when we went below the oscillator at the threshold of 20? So we want to locate all of those. We're not interested in if we're overbought, and people would say, but I thought we were trying to sell. We are, but we're not interested in looking for an overbought situation or somewhere in the middle. We're only looking for the so-called oversold territory. And once we locate those, we want to find the short-term bottoms that coincide with those oversold territories. And they're right here, as you see here with the red horizontal lines. You see there are other short-term bottoms here, but they weren't made in an oversold area. We want to get to those extreme conditions, and we want to see that those levels are violated. And once they're violated, that's where you sell. Okay? You see how simple that is. And now you are in sync with Apple, you're in sync with the trend, and you're going with the flow. You're not trying to pick a top or bottom. You're looking for those so-called conventional bottoms to be violated, and you just simply jump on board. How about the E-mini? All right, we had talked about shorting this originally, but once we add the other indicator, the 50-period simple moving average, we ask ourselves, where is price in relation to that 50-period simple moving average? Obviously, price is above. So what does that tell you? It means that if price is above, the only thing you should be looking for are buy setups. You have no business trying to short anything if it's above the 50-period simple moving average. All right? So if we're looking to go long the E-mini, the next step is to look for those so-called overbought territories on whatever oscillator we decide to use, such as right here. And we've located them circled in green. And the next thing we want to do is find a short-term top, as we have here with the green horizontal lines, that coincides with the overbought territories. All right, so we only want to look for those tops that are made when the market was telling us we're overbought. And now the next thing, we just simply see this, if those levels are violated, and we purchase right there. It's that simple. You see, if we had tried to short the E-mini, we would have really had a tough time. But now that we're in sync and going with the trend, now that we're going with the flow and using the so-called tops as our entries, you see how simple it is, how easy it is to be in sync with the market and to be in sync with making gains. Lastly, let's look at that older example we looked at with the dollar-yen. The same thing applies. We're going straight up. If we tried to short this, we really would have probably wiped out our entire account. But if we use the simple tool of a 50-period simple moving average, we ask ourselves, where is price in relation to that? Price is obviously above. So the only thing we should be looking for are long setups. We would never even consider going short. All right. Once we know that we're going to be going long, we look for the so-called overbought territory in whatever oscillator we're using. And then we look for the short-term tops that were made in that so-called overbought scenario, as we see here with the green horizontal lines. And once those tops are violated, that's our signal to get in. You see how well you would have done in the dollar-yen had you simply gone with the trend as opposed to trying picking a top. Okay? Now, this is how you get on the road to consistency. This is not a full-fledged strategy. This is just a technique we're showing you for entry on how to trade tops and bottoms. We have different stop techniques. We have different exit techniques. But what I'm sharing with you today is just a great edge for trading so-called tops and so-called bottoms. And it's really just going with them. All right, so let's look at some recent examples. I just showed you 3 older charts on purpose just for clarity's sake, just so you could understand the process. Let's look at some recent examples in all the markets within the last month. All right, let's start out with stocks again. Let's start off with SNDK. Now, we have the 2 indicators plotted, the same indicator as we used before, the slow stochastic, but it doesn't have to be, as you see here. There's nothing magical about it. It could be an RSI. It could be some other type of overbought, oversold tool, momentum tool. It doesn't really matter. All that matters is that it has an overbought setting and an oversold setting. That's all we want to find. So we've plotted the 50-period simple moving average, and we ask ourselves, where is price in relation to the 50-period simple moving average? Well, for a short period here, at the middle of April, we were actually below the 50 period, but the majority of prices then went above the 50. So if we look at our so-called oversold and overbought areas, we see here that a bottom was made below the 50, so we would have wanted to short if we went below, and we had some tops made above. Now, we have the red horizontal line here coinciding with the oversold territory, and as you can see, we never violated that. So this saved us from getting short when the market went up. So this was a great technique, waiting for it to go below, because we never did. But once we traversed above the 50, we had these really nice tops that were formulated in the so-called overbought territory. So all you had to do this past 3 weeks or so was simply to go long and purchase SNDK. You could have had nice 4, 5, 6 points there in the last 2 weeks. How about Twitter? Okay, it's been in the news a lot. It's been really behaving poorly. It's been going down. There was so much promise with it earlier in the year, and now it's been going straight down for the last couple of months. All right, we're not interested with what the company's doing at specialist trading. You know, one of the things my mentors taught me as well was not to concern ourselves with news. News is great if you're a long-term investor, if you're holding things for years. If you're trading for a matter of weeks or months, there's no reason to even be concerned with the news. So we don't concern ourselves with any news. The only thing we look at is where price is in relation to the 50-period simple moving average. All right, price is below, so it's telling us that the only thing we're going to be looking for are short opportunities. We're not going to try and pick a bottom in Twitter. We're not going to worry about how the company's doing. We're just going short Twitter. All right, you can once again short the stock. You can purchase puts. It doesn't matter. But now that we know that we're going short, then we locate all these so-called oversold territories on the overbought, oversold, slow stochastic. All right, and once we've located these oversold territories, we simply look for the sequences of short-term lows that were created in the so-called oversold territory. And you see how simple it is that all you had to do was, once they were violated, was to go short Twitter. Now, I know a lot of people have lost money in Twitter holding on to the stock or trying to pick a bottom in it. Once again, why try to swim upstream? Okay, it's a lot easier to trade with the current at your back. Okay, it's the same thing when you're swimming. It's no different from when you're trading. The current is where price is in relation to the 50-period simple moving average. All right, so you're just going with the flow. Once these so-called short-term bottoms have been violated, you simply sell, and you can see how well you're in sync. All right, let's look at some E-mini trades here. We'll start off with the hourly chart. This is going back to last month. Roughly in the beginning of April, we crossed above the 50-period simple moving average right here. So this is telling us that most likely prices are going higher. The market is giving us a clue because prices are above the 50. So this means we're only going to be looking for long setups. We're not even going to consider going short the E-mini or the S&P for that matter. So next thing we do is locate the so-called overbought territory here, and then we look for the short-term tops that coincided with that overbought territory. And once those tops are violated, you simply jump on board and buy. Okay? See, my mentors taught me, they said, Steve, trading is really simple. It's just us that overcomplicate things, and that's why we tend to lose. That's why 80% of most traders lose. We're overcomplicating our trading. They said it's the easiest thing in the world for anyone to overcomplicate their trading, but it's the most difficult thing in the world to simplify it. Anyone can add tons of indicators, tons of things to watch, tons of news. That all overcomplicates, and it's too difficult to follow. But it really takes discipline to simplify your trading so that you're only watching a few things and you're only listening to one thing, which is basically the market. Now, we all know how terrible the market acted this morning, especially. It was falling out of bed. Well, and a lot of traders will say, well, Steve, I don't trade E-mini on 60-minute charts. I trade it on 1-minute bars or even tick charts. Well, let's look at a 2,000 tick bar chart from this morning. This was this morning right after the opening. As you can see here, we opened lower. And where was price even coming into this day? Where was price in relation to the 50 periods of moving average? Obviously, price was below, excuse me, so you know in advance you're not going to look to buy anything. You knew in the first 15 minutes of the day you weren't going to purchase or try to pick a bottom in the E-mini. So there was no way you would have lost money trying to go long or trying to go short today, because the price was telling you that most likely we're going lower. Why? Because we're below the 50-period simple moving average. So if we look at our oscillator down here, we see that we had some really long periods of so-called oversold, and it's amazing how people rely on this tool, but we were oversold for roughly the first half hour of the day as we continued to go lower and lower. That's why we really don't use this conventional way of trading. And then we had a little bounce and then went right back into the oversold territory. So much more conducive to being in sync with the market had you just looked for those short-term bottoms and then you just sold once they were violated. Now, you could have done this today on this 2,000 tick bar chart or even a 1-minute chart or a 5-minute chart, and you would have a very nice first hour of the day trading the E-mini, just using the simple entry technique that I'm teaching you today. Lastly, the Forex markets. Okay, let's look at the longer term. The same concept we've showed you in daily bars, in short-term intraday bars. Now we're looking at weekly bars. Here's a current chart of the British pound, okay, on a weekly basis. Roughly last year, September, October, we confirmed that we crossed from below to above the 50 period. So this is telling us we should only be looking for long setups once we crossed above it, which was last October. And once we know that we're only going to be looking for long setups, we're not even going to consider going short the British pound, then we look for the so-called overbought areas. And once we've located those, we look for the corresponding short-term tops that were made in those overbought environments. And all you had to do was simply purchase once we violated those. Now, two very important points to remember. I just shared with you a great entry technique, but please remember, this was just an entry technique. I know a lot of you, when we get to the question and answer portion, will say, well, Steve, where do I place my stops? Where do I exit? What about risk-reward ratios? What about, drawdowns? Remember, I was just sharing with you a great entry technique on how to really look and view trading tops and bottoms with clarity. All right? I don't want you to really get stuck in this conventional overbought or oversold mode, because many times you'll do really well until it doesn't work anymore, and then you'll give everything back. Once again, I'm speaking from experience. I'm not just saying this off the top of my head. I know firsthand because I couldn't make any money for the first couple of years as a specialist. So this is much more conducive to being in sync. So the 2 points that my mentors taught me and that I want to once again share with you is that firstly, you have to really understand this concept that there is no such thing as overbought or oversold. We've always been taught that either indicators or certain market thresholds will tell us when things are overbought or oversold, but that's just not true. I just showed you the intraday chart of the E-mini from today, from this morning, where the oscillator was in the oversold territory for roughly almost an hour. Okay, so we don't, if you rely on that, you'll really, wind up giving a lot of money back to the markets. So the best thing is just to get rid of the concept of overbought, oversold. As I stated, it's more like a gambling mentality. It'll work for a while, but then when you have the trades that don't work, you wind up usually giving everything back. What we're looking for at specialist trading is consistency. So there really isn't a lot of consistency with this style of trading. So lastly, if we're aware that there are no such thing as overbought, oversold markets, then we never ever want to try to pick tops and bottoms. Now, in specialist trading, we do try to pick bottoms in an uptrend, okay? And we do try to sell in a downtrend. And so that's more of a pullback type of strategy. So we have nothing against that. But usually people do the opposite. They'll try to pick a bottom when price is below the 50 periods of moving average, and they'll try to pick a top when price is above the 50 periods of moving average. We want to be in sync with that overall trend tool. So please remember, if price is above the 50 period, don't try to pick a top. Just look for bottoms or go with the flow. If price is below, don't try to pick a bottom. Just you can look to try and pick some type of a top on a pullback or just go with the flow. But that's the best way to get to that level of consistency. All right, that's what we're trying to instill in all of our members. That's what turned my trading around so that I was able to get on that road to consistency. And this is what I'm trying to teach all of my students and members. So as we get close to the question and answer portion, I want you to ask yourself this and really honestly ask yourself, do you think this edge that I shared with you could have helped your trading this past year? Either the edge of knowing that we're not going to trade tops and bottoms in the so-called overbought, oversold, or even the edge of the 50-period simple moving average. If you simply would have used that, I can almost guarantee you that just based off that tool, if you had gone back and maybe looked at your last 20 or 30 trades, see this, if you were in sync with this simple 50-period simple moving average. And I can almost venture to say that most of your losing trades were because you were out of sync with this particular tool. So ask yourself, do you think any one of these edges could have helped you? What if you could have more edges like this? What if you could have 10, 20, maybe even 30 more edges like this? Well, if I can take just a few moments to talk about a great offer we have here for you today. This is Secrets of a Stock Exchange Specialist Training Sessions. This was a seminar I was asked to speak at in Colorado last year that was recorded. It was a 3-hour seminar where I gave a lot more edges such as you saw today, probably about 20 or 30 more edges for tips for trading and trading techniques. I also gave the complete rules to one of my best strategies. That's strategy number 1. I gave away all this information in the seminar, which people paid hundreds of dollars to come see me speak. And it's 3 hours of trading techniques plus a full strategy. In fact, this is actually a great strategy. Let me show you some of the current signals that our members have taken using strategy number 1. We talk about SNDK again. Here's another example of how this strategy works. As you see, we're purchasing very close to the lows here with this particular strategy. So this tells you that this is a pullback strategy. We're in sync with the market, but in this case, we're looking to buy at the lows because strategy number 1 is based off of pullbacks. The best thing about this strategy, it works in any market in any direction. This is just about a month ago in the E-mini on a 5-minute chart. You see here we had some really nice sells going short. Why? Because we were below the 50 periods of moving average, and strategy number 1 told us to go short in these particular bars. And then lastly, if we look at the euro dollar on a weekly basis, we see here that we've had some really nice buys right almost at the very bottom of these nice pullbacks on a weekly basis in the euro dollar, all using the same rules for strategy number 1. So this comes in the training sessions. This is a great 3-hour video training session. This comes with more high probability trading edges, such as the one I just shared with you today. We talk about which indicators to use and which ones most especially not to use. I go into detail between the difference between a system and a strategy. I share with you what I believe is my #1 chart pattern for trading any market. I share with you how to be on the right side of the markets, and then I give you the complete rules, the entries, the exits, the stop placement for strategy #1. I just showed you some of those current signals we got. And remember, this applies to any market, any time frame. And lastly, you get access to my personal email address. You can contact me whenever you'd like, and I'll answer any question if you just don't understand a current technique I'm trying to teach you. Now, this is 3 hours in a video session of, once again, of the seminar I spoke at with the strategy #1 rules. We, on our sister site, Pro Trader Strategies, we market this for nearly $1,000. But because we're doing this in conjunction with Power Cycle Trading, we're offering this for all of you in attendance today for only $37. I mean, this is an unbelievable price, especially off of the signals I just showed you using strategy #1. I'm sure there were a lot of strategy #1 signals today that could have paid for this many times over, dozens of times over. But you get all of this. Once again, 3 hours of a recorded video seminar with all the different edges, such as the edge you saw today, roughly about 10 or 20 more, and the complete rules to strategy #1, reduced from $997 down to $37. But this is for a limited time only. This is once again because we're in conjunction with Larry Gaines and Power Cycle Trading. So we just want to do this in good faith, and hopefully you can learn a lot from this and be able to use it with your trading. So for more information, you can contact our sister site, which is ProTraderStrategies.com. They market and promote all of our individual strategies and courses. You can contact any one of their trading consultants by emailing them at trading@ProTraderStrategies.com, or you can call them directly at area code 310-598-6677. And lastly, as you see at the very bottom there, that link, that's the link. If you want to copy and write that down, that is the link that if you're interested in just automatically purchasing the 3-hour video sessions for the $37 discount, you simply copy that down and you can put it in your browser, and it'll take you to the page where you can sign up and purchase it. It's a one-time fee of $37, but that's only going to be there once again for a very short, limited time, I believe only for a couple of days. After that, it goes back up to nearly $1,000. So if you're really interested in getting some more information, such as I taught today, for that low price, copy down this link right here, and it'll take you to the page where you can purchase it for $37. All right, I want to thank you so much for holding off on the questions. I'm going to open up the question and answer box, and I appreciate your holding off. And let me just go to the page here. Which is better, WA asks, which is better to use on the stochastic, slow, fast, or full? Well, to be honest with you, WA, I don't use the stochastics. I use them in terms of this example here. We have courses that use something that's much better, but it's in the course and it's a little bit more expensive. But if you want it, once again, I gave you this information for free. I would say use the slow stochastic. It's very common, very basic, and this is what I used in these examples, okay? So I would just use your standard slow stochastic, and it's not so much, remember, where the lines cross, because we're not interested in that. All we're interested in is the overbought and oversold thresholds, because that's what, once again, conventional wisdom tells us that's where you should short. So we want to look to see that those shorting tops are violated, and we'll jump on board and buy, and those bottoms are violated, and we'll jump on board and sell. That's all we're looking for. So I would suggest just starting out a slow stochastic, and all you're interested in, if you want to use this technique, are the overbought threshold and the oversold threshold, okay? Polly asks, can you give me the address? The email address, I think we have it right there on the screen. Let me just show you. Trading@ProTraderStrategies.com, if that's what you're asking, or you can call us at 310-598-6677, okay? Remember, all of our courses are online. These are online courses. We send the information to you immediately so that you can be up and going within the next couple of days. You'll be seeing the video if you decide to purchase this $37 deal. You'll be seeing it within the next 10-15 minutes. But you have to go to that link that we have at the bottom of your screen, put it into your browser, and then simply sign up for the $37 deal, okay? Let's see. Polly asked, like the Russell today, there was a break of support. Well, sure, there was, and you could have used that, but we don't. We based our signal 2 days ago, not based off any support. If you looked at the mini Russell or the Russell index, we've been below the 50-period simple moving average for quite some time now. The E-mini in the S&P has been above the 50-period simple moving average. So we saw a really great opportunity using about 3 of our different strategies. Strategies 4, 5, and 7 all gave sell signals in the Russell index. So we decided to post those for all our members, and all of our members who took those had a really nice gain. They had a two-day short, fantastic trade there. So they were in the trade for 2 days. You would have exited today and had a really nice gain. And it's as simple as that. Had anyone tried to pick a bottom in the mini Russell, you would have really lost a lot of money. So all you have to do is look at that simple technique I taught you about the 50-period simple moving average, punch up a chart of the Russell index, and see that price is below, so there's no reason to even think of going long the Russell. So according to the rules of one of our other strategies, we got short, and it worked out great. Tim asks, where do you place your stops or make your decision to exit? Once again, Tim, that's in the courses. I didn't want to give away all that information because that's for the people that purchase our courses. You'll see that information within the if you purchase the $37 special we have here. For strategy number 1, I give you all of the exits and all of the stop placement, but it's different for each different strategy, so that's another thing. But I just don't want to give away all of our information. It wouldn't be fair to the people who have spent thousands of dollars on different strategies, and then I give away everything for free. So today I just shared with you a great entry technique. Okay? Once again, in the course, you find the exact stop placement. We give you the exact exit placement. We give you entry points, and then we give you advanced entries, advanced stops, advanced exits, so that you have a different things to choose from that best suit your needs. Remember, we're not a systematic type of signal generating company. We're more of an educational company. We're giving you this smorgasbord of great things that have worked for over 37 years, and then we help you construct it so that it best suits your needs. We have lots of traders that like to trade aggressively, and we have lots of traders who like to trade conservatively. So we use the same foundation, but then use different entry and exit points, different stop placement, so that they can feel comfortable with the particular trading. As I stated in the first 5 minutes of this presentation, we are an educational company. Okay. RBS, why does stochastic have to be an overbought? Well, we're going against conventional wisdom. In other words, when something is overbought, conventional wisdom tells us it shouldn't go any higher. But as we've just seen, most of the time it does. In fact, it goes a lot higher. So we want to find those places where everyone is saying we won't go higher, and then if we see it violated, we want to jump on board. And usually these people have to cover their shorts, or they decide to become buyers, or they just waited too long. But we've been taught, myself included, that when we get into these overbought territories, we shouldn't go any higher. We get into oversold territories, we shouldn't go any lower. But we've seen that that's just not true. Things go lower and lower for days, if not weeks. Things go higher and higher for days, for weeks, for months. So why use those things that don't have a lot of consistency? Why not just use them to our advantage, where we just use the tops to go long and the bottoms to go short? That's why. Paulie asks, my question is, where is the 50-period simple moving average more reliable for setup purposes? I'm not really sure I understand the question. Remember, the 50-period simple moving average is just used as an overall trend tool. It's not an indicator to help you know when to get in and when to get out. It just tells us what side of the market we're going to be on. Are we going to be buying or are we going to be selling? So if you see price above, automatically you know that whatever strategy you're trading, doesn't have to be one of mine, could be someone else's, you just know that you should only be looking for long setups. You only want to go long. If price is below, such as we saw in the Russell Index this past few weeks, we're only looking to go short. We would have really gotten killed if we tried to pick a bottom in the Russell Index the last couple of days. But we didn't. We went with the flow because price was below the 50-period simple moving average. So we only use the 50-period simple moving average as a trend, an overall trend identifier. We don't use it as an actual strategy entry or strategy stop placement. I hope that answers your question. How does SSYS and GS look going forward? Well, Jim, I don't have access to real-time charts here. I'd have to look at them. I would have to, this is just a PowerPoint presentation. And, you know, all I can say is I'm pretty sure you can answer that question. If price is below in any of those, you know that we're going to be looking to go short. We're just going to be looking for short setups. If price is above, we're only looking for buy setups. That's how simple it is. Once again, Jim is asking if we can look at the Russell. This is not a live presentation. I don't have access to charts. It's a static presentation. We're not dynamic. I just have the old charts here on the PowerPoint presentation, so I'm sorry about that. RB is asking, once you enter, where do you get out? Well, all that information is in the course. Once again, if you purchase that 37 extremely low discount deal, you'll get all the different exit points, and you'll get all the stop placement, as well as different entry points as well. Manfred asks, are there also examples in sideways markets? Yes, that's a great question, Manfred. In fact, what happens so many times is with our strategies, since we're looking for particular setups, either for patterns or for a particular indicator, they're extremely simple. I don't want you to think that this is so complicated you have to have a degree or something to understand this, or that you have to be trading for years in order to understand our strategies. Most of the people that trade these are either hedge fund traders who've been trading for years or people that have been trading for a couple of weeks. They look at the same rules. There's no difference. And so what happens oftentimes is because of what we're looking for, we won't have a signal that's generated because it doesn't generate in choppy markets. We need to have more requirements met, and those requirements aren't conducive to sideways markets. So oftentimes we won't get trapped in these choppy markets. We don't have strategies per se that just work for choppy markets. We're more trend followers, as you saw today. We just look for trending type of entry points and strategies. We look for the market to tell us that it's moving in a certain direction, and then we simply jump on board. That's a philosophy to all of our trading. And we have a number of different strategies, upwards of 10 different strategies for all of the markets that have a way of finding that, each with different indicators and different type of pattern. But we're never trying to pick a top or bottom, and we're not trying to trade choppy markets. So most of our strategies basically keep us out of those environments. I'm not going to guarantee you in saying that we don't get caught in those sometimes. Sure we do, but we have ways to stay out of them as well. Okay. Let me see here. I'll go to some more questions. Gary's asking, will there be a recording of this? Yes, there is. We are recording this. If you want a link to that, you can contact the phone number or send an email, and we will provide you with a link to the recording. Okay. Let me see here. Someone said they've had this problem, but it's helped. Great. I'm glad we can help you. Remember, as you see here, with the attention I give to detail, we're all about teaching you. I'm a trader myself. I make my money trading, not through teaching so much. But that's my goal. I want to teach you the same way my mentors taught me. So there's enough to go around for everyone. It's not that there's so many profits available. There's an infinite amount of profits to be made. So why not share with you what works, what stood the test of time? So that's my goal, just to share with you the same things that were taught to me. RB asks, once we pay, is that course available forever? Yes, it's yours to keep. So this is with all of our courses. And here's another thing that people have asked me. They said, Steve, do you have upgrades? Say I purchased one of your courses. How do I know I don't have to pay an extra $500 every year for an upgrade? We don't do business that way. Most of the things that we sell and market, I use myself, and I have been using the same things for roughly over 30 years. So I've never changed or altered anything. And when we do, by some very small measure, alter or change something, we just share it with you and as a suggestion. So there are not a lot of upgrades where we say you have to pay so much for an upgrade. Pretty much, once you buy our strategies, any of our strategies, either the $37 deal or one of our strategies to trading the markets, it's yours to keep forever. And pretty much so you're a lifetime member of Specialist Trading. We're not going to say you're cut off from sending me emails forever. You can contact me whenever you'd like. Okay, let's see here. How long is this online trading video available once purchased? Well, once again, it's yours. It's for today only. In other words, this, I believe, 1, maybe 2 days at the most. You'd have to check with our office, but the deal is only for that short of a time. But once you get it, it is yours. Okay. Is it a book or an ebook? It's a recording. It's 3 hours of archived trading video. So it's a session that I did in Colorado last year. I was asked to speak in front of a members group, and these people paid to come see me, and so I gave them a free strategy over the course of the day, and I gave them a ton of information in the 3 hours that I spoke. They recorded it, and we had the recording, and we're offering you this recording, this video recording for $37, and it's yours once you purchase it. RB asks, does the 50-period simple moving average work on any trend, on any time frame? Yes. As you saw there, I showed you a 5-minute chart of the E-mini. I showed you a weekly chart of the currency pairs. I showed you daily bars of stocks. And we applied the 50-period simple moving average to all of them. So you see how well it worked in all of those markets in all the time frames. So that's all we use at Specialist Trading. We only use a 50-period simple moving average to give us the overall trend. Let's see here. Okay, let's see. John is saying, Steve, let's say you want to day trade a certain security using your tops and bottoms buy and sell points. Do you use a shorter time frame to place orders after looking at a longer time to find where the 50-day moving average is? That's a great question, John. Probably the most asked question I get. In other words, what John is asking is, do we use a higher time frame to validate the lower time frame and vice versa? John, my way of trading is no. I don't use that technique simply because I found that it keeps me out of a lot of trades. So my approach is I only trade the chart I'm trading. If I'm looking at a 5-minute chart, that's the only thing I look at. I only look at where price is in relation to the 50-period simple moving average. I look at the signal indicators, and that's all I look at. I don't look at a higher time frame to tell me what to do on the lower time frame. It just makes in my opinion, my trading too complicated. Now, having said that, we have a number of members who trade that way and who swear by it. It says it really filters out trades, and it gives you a higher percentage of winning trades. So that's fine if that feels comfortable for you. Remember, we're all about giving you this information so that you can construct something that meets your needs. If that's part of your need, if you need to use that, then fine. Okay. Personally, it doesn't work for me. I seem to miss a lot of trades, and I'd rather, with my schedule, just take the trade I have. But a lot of people say, no, I have time to take different setups, and I use that, and that's fine. So whatever works for you. It doesn't alter the basic philosophy behind our strategies, okay? Gary says, next time, why don't you have live charts? We could do that next time, but what we're trying to do is teach you, and so we're more about teaching you these concepts so that you can understand them as opposed to going over live setups. Let's see here. Tim asked, what percentage returns you achieved with your strategies in your own account last year? Well, first of all, Tim, every strategy is traded differently, okay? And I can't give you that information because I trade for an account which is a private equity account. I can't give away that information. But all we're saying is, listen, use this information on my presentations that I give for free. If you're not convinced, or if you do a Google search on me and see what people have said, and see what type of results you've gotten from doing searches on us, you see that all of our customers are extremely happy with the information we give. Remember, we're trying to teach you how to be consistent. We're not going to say that this is systematic, that we produce thousands and thousands of percentage points a year. We're trying just to get you on that road so that your trading P&L doesn't look like a roller coaster, so that you're basically riding high in April and shot down in May. We want you to have this nice upward slope consistency to your trading, and that's what our methods and our techniques do. So that's what we're trying to give you. We're not trying to promote strategies that generate so much performance. We keep track of some of our strategies that are on daily bars, but everyone trades differently. We have people that only trade those strategies on 5-minute bars. We have people that trade them on tick bars. We have people that trade them on weekly bars. So we're not that big enough in a company to keep statistics. And we're not a systematic company. We're an educational company. So we really don't have the numbers. I'm sorry to furnish you with that. Let's see here, Gina. Recording, is this being recorded? Yes, he'd like to have the recording. Yes, we offer that. I see, let's see, Gene says, just to let you know, I tried to use the website listed to purchase the offer but couldn't get it to work. Well, remember, Gene, I said what you need to purchase this offer is the link below. I hope you copied that down. That's the link below where you see more information here on this page right now. Let me just close this box real quick. It's http://bit.ly/1jk3th8. It's right here, okay? And all you have to do is simply copy this down or type it into your browser, and that should take you to the area so that you can purchase the $37 deal, okay? I believe the strategy right here, the Pro Trader Strategies, that's just our sister site that we work in conjunction, that monitors and that promotes all of our individual strategies, okay? If you have any trouble, contact us through this phone number, 310-598-6677. I think that would probably be the best thing if you're having trouble, or any of you are having trouble signing up for that deal, okay? But this is the link you want to copy down, paste into your browser, and simply take advantage of that great discount. We have time for just one or two more questions. So John asks, so it doesn't bother you if price is above the 50 on an hour chart but below the 50 on a 5-minute chart, because each time frame corresponds with a particular holding period. 5-minute in and out chart, hour 1 to 3 days, for example. You got it, John. You answered it perfectly. Yes. Now, once again, this is just my personal preference, but that's the way I like to trade, John. For example, I've traded 5-minute charts that have been above the 50-period simple moving average going long when the overall trend on an hourly chart was below the 50, and I still had profitable trades. Now, this is just the way I like to trade. So, if you want that more assurance of the higher time frame being in sync with the lower, that's fine. You're not doing anything that is out of sync with our philosophy of specialist trading. So that's okay. There's nothing wrong with that. That's why we say we're flexible and we can't back test and systematize everything, because everyone trades these differently. Everyone, will trade more aggressively. They'll use higher time frames. They'll use tick charts. They'll use daily bars. There's 1,000,001 ways to trade these. So we just really want to fine-tune them to meet your needs. Okay. I guess there are no more questions, so that's it. I just want to thank you all for attending. And in closing, I just want to state that we are once again, for the umpteenth time, an educational company first and foremost. You see how much detail I give in trying to instill in you all the things that I've learned just in this short presentation. So even though if you decide not to become a member of Specialist Trading or purchase any one of our strategies on ProTraderStrategies.com, you have some great tools that I gave you today for free that you can start using, hopefully, that will elevate your trading, whether you want to use the tops and bottoms technique or whether you just want to use that 50-period simple moving average, regardless of what time frame, regardless of market. I think if you use each one of these, even separately, they'll really take your trading to the next level, which will hopefully get you on that road to consistency. If you want to take, get more information and have me trading right alongside with you, then I would really suggest taking advantage of this $37 deal and becoming a member of Specialist Trading. And you can email me with any questions anytime you'd like, and I'd be there trading right alongside. Okay, in closing, I want to thank all of you for taking the time to come to this presentation today. I want to thank Larry Gaines for inviting us to present this in conjunction with Power Cycle Trading. And thank you all once again for attending the webinar, and I look forward to all of you becoming members of Specialist Trading. Thank you so much, and best of luck trading. I'll see you next time. Bye-bye.